All right, yeah, there you go. Sometimes these things just happen.
Let's see if someone can confirm on our YouTube chat.
Okay. Brian, are we loud and clear on audio on YouTube?
I'm asking. I can't tell because it uses a different channel myself when I'm on my headphones. But I would guess we're okay. Yep, we're good to go.
Okay, and Gary, are you paying attention to the Periscope stream? And are we fine with audio there?
Audio is fine both on YouTube and Periscope.
Nice. All right. Let me then very briefly repeat my introduction for people that have not heard us on YouTube. Hello, everyone. Sorry for a bit delay. We're still trying to figure out the best way to stream on multiple platforms. So welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Santiment team and community members gather around and discuss the recent crypto market events using Santiment's own data, metrics, and indicators. So if you haven't used Santiment before, over the last 3 years, what we've done is developed dozens of tools and custom metrics with 3 main sources of information, these being on-chain data, social media activity, and development activity of over 1,000 different cryptocurrencies. And we've developed a variety of new and interesting and unique metrics and indicators with the idea of helping you better understand what's going on with the crypto market and the behavior of their most important participants and market stakeholders. So check out app.santiment.net during the call or after the call to see everything that we are going to talk about and get access to all of the metrics that we're going to be talking about. There is a 2-week free trial. Afterwards, it's just $49 a month. But like I said, just to dip your toes in the water first, see it for a couple of weeks, just how powerful the platform actually is. And I'm pretty sure you'll stick around afterwards as well. If you are not on our Discord already, there is going to be a link to our Discord in the description of this video on YouTube. So if you don't want to wait until the next Friday for to talk to us about market events and the general state of the market, we talk about these types of things that we are going to cover today pretty much every day on our trading channels. So check out the link to our Discord and join our conversation and talk about the crypto market with us. All right. So with that being out of the way, I think, yeah, there we go. So Brian is already presenting his screen. I am not. So Brian, I'm just gonna share your screen as well. There we go. So the topic of today's video is possible shaky fundamentals when it comes to Ethereum in the past couple of days. We are going to be talking about a variety of indicators that we have kind of been keeping an eye on as far as Bitcoin and Ethereum are concerned over the last week. But we are also going to be talking about a few different altcoins, specifically Chainlink and OMG. OMG being the top performer over the last week. I think it's about plus 75%. It's gained about 75% in the last week alone. We yesterday published an insight saying that we think that the top might be very near. So we are going to be talking about some of the reasons why we think that might be the case. But before all of that, I think we're just going to have Brian give us an introduction to the general market conditions over the last week. After Brian and I kind of give our thoughts on what we've been seeing in our data, we are going to be taking questions from the audience, guys. So after the first about 30 minutes of the stream, any sort of coins or market events that you would like us to cover, especially if you're thinking about maybe getting into a specific coin or getting out of a specific coin, and if you're maybe wondering what the fundamentals are saying, what the short-term potential might be, long-term potential might be, we are going to be doing some very impromptu fundamental analysis on different coins that the crowd suggests in the chat. Obviously not financial advice. We're just going to be saying what we think based on the data the coin might do. But given the OMG's sort of amazing run in the past week or so, it's always going to be a gamble. But we're going to try to be as data driven as possible, and that's what Sentiment really is all about. So Brian, if you want to start us off with a few of your templates, I think you already have one shared on your screen. Go ahead.
Awesome, Dino. Thanks so much. So welcome, guys. We are kicking things off with a look at the previous week's returns for the top 100 blockchains. You'll notice it's kind of a mixed bag over the last week between losers and gainers, a few more losers than gainers. And keep in mind that even though these bars are not as large as the green ones are, it generally takes, since red can only go -100, whereas green can go plus infinity percentage, you'll generally see this even when we have break-even weeks like we did this week. And you can't really see the purple too well here, but we literally had a median of exactly 0.0 over the last 7 days for the top 100 coins, which is actually pretty rare. And that coincides with Bitcoin's change, which was also break even to the 10th decimal. So we had a few huge surges, right? We had OMG going up parabolically over 244%. We had YEarn, which has just been a killer for DeFi over the last month. They're at 182%. But for the most part, you'll see that a lot of our top blockchains were kind of around break even. We had a few tough ones like Chainlink, which I'll get into in a moment. Ethereum had some pullback of -7.2. We'll be touching on that as well, as Dino mentioned. And then we had plenty that kind of hovered around even. We had Neo that actually gained pretty well at 21%. But for the most part, we're seeing mostly reds on the altcoin side. And generally, at the end of alt cycles, and I'm not saying this is the end, but we are seeing hints based on the fact that the lower cap ones in particular are really starting to drop a bit, and the mid caps as well. And generally last, the domino that falls last are the top 30 or so altcoins. So barring the exceptions of OMG and YEarn and a few of these up here that had really good weeks as well, we may start to see a confirmation of the altcoin run coming to a temporary end if these kind of turn red as well and start to drop. And they won't be big drops. I think it'll be gradual when it does happen. But what I'm going to show now is our DAA divergence model that kind of confirms that we aren't getting the daily active addresses that we should be for a lot of altcoins. And that tends to be the foreshadowing of a retracement, so to speak. And of course, we've been seeing this for a few weeks now. Even as early as late July, we've been seeing a lack of daily active addresses. But over the last couple weeks in particular, we've been seeing more and more red here. So just to give a quick explanation of what we're looking at right now, this is a divergence table that just shows a good mix of the top 20 to 25 assets that we have daily active address data on. They're mostly ERC20s, but we have a few exceptions like Litecoin, Bitcoin, Binance Coin, and a few others. But the percentages we're looking at, and keep in mind the current day is still in process, so they'll be a little lower than usual. But if you look at these past 4 full days, right, this is measuring the divergence between what the average price has been versus what the average daily active address has been, and then shows the divergence between what the expected daily active address output currently is versus what the current price is. And mostly, if we sort by highest to lowest from the most recent full day here, we see that FET and OMG have been surging with daily active addresses. But as we go past the top 4 here, after Maker and Litecoin, I'm sorry, top 5 that is, with Ripple also in the positive, the rest of these are all negatives, meaning they are getting a deficit of daily active addresses that are expected compared to where prices currently are. So if we start off with just Bitcoin, we'll see that it's been a sea of red, really with just one exception over the last almost month now. We've been getting a slight deficit in daily active addresses compared to where prices went pretty much as soon as things jumped above 10K and immediately went to 11K the next day. If many of you remember, from the 26th to 27th, it eventually jumped all the way to 12K. You won't see it because it didn't close at that price, but eventually we had a close above 12K on August 17th. And that's when things really started to get neon red. And when things are neon red, that signifies that it was a bottom 10% performer in terms of this model on daily active address versus price. Alternatively, you can look at bright green, like we saw around Black Thursday, which says basically, whoa, we are way too low in price right now. We have a surplus of daily active addresses, and we should not be this low for very long. So with all things equal, if you believe in both the bright green and bright red, which this model for most assets, and I'll show Ethereum, which almost reflects it better than Bitcoin, it's done a pretty damn good job of reflecting where prices are going to go, as long as you believe in daily active addresses as an indicator of where prices go over time, which we at Santiment definitely do as one of our favorite metrics.
Hey, Brian.
Yeah.
Sorry, yeah, this is, I didn't even know how big this daily or the last drop off really is. Can you show that on Sandbase as well, just so people can kind of see what that actually looks like on the chart? Yeah.
And if you're referring to this last one, just keep in mind it's still a current day. So as daily active addresses come in, this is going to go up, whereas price is still going to stay the same.
Gotcha.
So keep in mind the very last bar is still misleading. And I could have just prepared it to show the close of yesterday, but I wanted to just give an accurate update to show where markets are as of right now. But I will show that really quick. I had Ethereum open. Before I do that, I'll also show Bitcoin. So these are Bitcoin's daily active addresses. I'm going to remove social volume here for a moment. Over time, basically, if we zoom out to, we'll just go all time, just to give some reflection. You'll see that DAA tends to follow prices, right? They're on their own axes, so take this with a grain of salt. But DAA really peaked right around the same time as price, according to their two independent axes. And then it dropped as DAA dropped. And oftentimes it'll foreshadow it, right? Like right here, for example, it started to bounce before we actually hit our bottom. But as DAA was rising, if we had this model back in early 2019, it would have been screaming neon green bars that basically said there's a bullish divergence forming. And I'll jump ahead really quick to show you a good example. I had FET open. FET yesterday, I made a post about how the DAA was jumping up despite the price dropping. If I can zoom in just a little here, it reflects it better. Yeah, so here, as prices dropped, this was yesterday's daily active address bar. And you'll see that we actually had our third best day over the past month for FET, despite the price drop. And that's what caused, if I go over to FET, that's what caused these huge green bars, because when DAA goes up, price goes down. That's a classic bullish divergence. Now, oftentimes things may not react immediately like you want it to, but over time, when you're getting a lot of these green bars, it's a pretty good sign that there's something imminent coming and that this kind of drop off wasn't necessary. And it's probably, you know, following what a lot of altcoins are doing right now. But as markets stabilize, these are the kind of divergences that you look for, and we'll see if FET still looks like this at the time that altcoins kind of calm down a bit. But going back to Bitcoin really quick, if we zoom in, go to the last month, we'll see that it's been a slight decline over the past month, despite price having a slight increase. And that's what's causing the mild bearish divergence that we're seeing now. And with Bitcoin and Ethereum especially, there can be some really juicy delays as to where prices go that are foreshadowed very well by DAA. So right now we're seeing a mild one for Bitcoin, but going to Ethereum, I want to make this a little bigger just to maximize our space here. Can I do this? There we go. Ethereum, look at this. This is basically as bearish as we can get in terms of DAA, and especially when it jumped all the way to about 440 or so, a little above right around last week, or even I think it was just 4 or 5 days ago actually. That's when we started getting a big deficit in daily active addresses, because we didn't get the push up in DAA. I'll remove social volume here. We don't need to see that. But look, we had this huge rise in DAA, right? All the way up until we hit around 400. And then we started getting a pretty massive drop off. I mean, this was actually, I reported this day, and it was over around a 2-month low, despite prices being, near 2-year highs. And we did get a drop off in price that day, but the drop off in DAA was even worse. And this was a very telling sign. And when we had a big bounce up to above 440, that was very shocking. And that's why we saw such huge neon reds here, right? So as of now, we haven't really seen anything close to what we saw when it was up around 400, and there was probably a lot of polarization going on. Some people hit their targets and may have sold, which caused some extra active addresses to go off. Others, view those psychological thresholds as a FOMO opportunity, and they were actually rewarded when it went up to 440, despite the fundamentals, at least on the active address side, sort of disagreeing with them. So right now, ignore this final column, right? Because this is still our current day, and this is only going to go up. It'll never go down. We're just seeing a major deficit right now in DAA, and this is concerning. And Ethereum is one model that follows things pretty well. And if I zoomed out to the last 2 years, it would still show very predictive, very accurate leading indications here. So as you can see, lots of red here, and it wasn't even as low as it is now. So major red flags, no pun intended. I would advise caution with this model, and I believe in this model a lot. I'm not going to give investment advice. We can have a turnaround that can cause a fake out. We could just have a huge surge in daily active addresses caused by whales, caused by a lot of people who think that a dip below 400 that could be imminent. Looking at the charts right now, if a dip happens below 400, we may see a surge of new addresses jumping in that could make the DAA look a lot healthier all of a sudden. Or we can just have the price drop off enough where the model will say, okay, now we're at an appropriate price, and these bright reds will start turning into medium reds or mild reds. And if DAA starts to go way up with the decline, that's when it'll turn green again. But I don't believe we can suddenly just turn around from this in a heartbeat based on a pretty classic bearish divergence that doesn't really get much crazier than this, especially for a top cap. And going back really quick to the table, just so we can compare, there are a few good signs. If I go to the most recent day, once again, we have FET, like I said, I showed you that. OMG, this one's kind of in real time right now. There wasn't really a huge indicator that it was going to happen, except for right here, right? So if you look at August 17th on the chart, I'll go just last month. 17th, we had this bar, and notice that it isn't nearly as big as these, but it didn't have to be because the price was way lower, right? We were at, it looks like we closed at 328 on August 16th, and then we peaked yesterday at 863, right? So that's like we showed on the first model, that was around a 245% increase. And DAA was really starting to rise around here. And that was kind of a foreshadow that we could have some fireworks coming up. I would not have been able to see something like this, and I don't think any of our Sandbase members would have to see this quite of a parabolic rise, but it was significant. And we do have, this model that can point out when there is a huge jump. And this was the biggest jump in the model in over 2 months. So it told us a little bit of something was going on, but this is obviously pretty unprecedented. And the major trend that you'll see is that most are way under, right? If we look at Lend, right, the worst projected, most overinflated, only in terms of daily active addresses, of course, not overall. But look at this. As the price has gone up, it's basically said, yeah, we've gotten way better daily active addresses in the past, so this isn't as impressive as the price is reflecting. And if we look at it on Sandbase, let's zoom out to, we'll say 6 months. Yeah, we'll go a little further back. Yeah, so I would say the major reason that price and daily active addresses are not agreeing right now is because we've had a few major spikes, and these do get canceled out, by the way. We use a median instead of a mean, so we remove outliers. But even still, because it's gone up so parabolically, I think it was up over 1,000% at one point over a 3-month span after Black Thursday. It's still up around 800 to 900% since that time. DAA has gone from, we'll call something like this bar the average just by eyeballing. We had 166 DAA. We've been getting around 1,800. So it has been a multiple of something like 10, but this price has gone up so fast that DAA hasn't kept up. And that's why we look at a model like this and it's just getting brighter and brighter red, because we're not getting enough justification for that price. So I won't go too much longer on it. I would highly recommend any Sandbase Pro members check this out. And if you are free, you will not be able to see this. I think we're in the process of ensuring that. So we do advise our paid members to check this out, and it is a very worthwhile model that's worth the money, and I can get over the link to any of you. I want to show one other thing, and then I'm going to sort of cut myself off here because I don't want to hog too much of the time. We have a MVRV model here that basically shows the last 30 days of returns and the last 1 year of returns for the average trader. So I'm going to move this over here a little so you can see it better. I'm going to sort by the most the highest return for the average trader versus the lowest return. So if you just ignore the red bars for a moment and look at the blue, you'll see that OMG had about 59% returns for the average trader. And that makes sense when it's gone up over 244% over just the last week, right? As you go down, you can see that synthetics, for whatever reason, average traders have just been getting brutalized. And I think the token is down a little, but obviously not nearly this much. It's probably because there have been a lot of fake outs, or this could be an anomaly, to be honest. That's so big that there could be some reason. So I'm going to just advise we ignore that for now. But if we do look at the best opportunities, it's usually the ones that kind of agree with the DAA model. And that was like Maker, right? Maker was toward the top of our DAA model as one of the relatively more bullish ones. It's actually in the positive right now. And if we look at it, we can see that ignore this because this is we can see that we've been getting some neon greens, and the last couple days have been sort of low to medium greens. That's a good sign that tells us we're getting a healthy amount of address activity compared to where the price is right now. And if we look at the MVRV, the average trader is actually down on it right now, which is giving the best opportunity. When we see negatives, that means it's usually an opportunity for us to go against what the other traders are doing right now. And while other traders are, heavily in things like Chainlink, if I can find it. Yeah, Chainlink is now back to about even over the last 30 days, but look at it over the last 1 year. Where is it on my chart? Here we go. Yeah, so the 1 year return for the average trader. These metrics hover around 0, guys. So for all assets, whether it's a 30-day, 1 year, 5 year, whatever, they're going to be around 0 historically. So anything that's up this high for something like Chainlink or for Band or for synthetics, these are going to eventually come back to 0 with enough time and enough fake outs and enough FOMO and enough FUD. Even if prices go up over time, you don't want to be too risky with assets that have sky high returns for the average traders like this. That's why I advise, if you are going to use this model, which I think it is very useful, especially from a social perspective, where you want to know what the average traders are doing and sort of countering against that, you want to be looking for the negatives, right? And for the 1 year, there are very few negatives. We do have like ELF, we have Golem, and a few minor ones like Mainframe, Binance Coin, which is interesting. So you want to look for those opportunities, but you'll still see over the last 30 days, the vast majority are in the positive here. And that tells me that altcoins are probably a little overinflated, and whether they drop significantly or even if they just have a temporary fake out that shakes out some weak hands to get average traders back to 0%, that's going to eventually happen in order to justify altcoins being where they are. So keep that in mind. If you want access for that, let us know in the general channel in our Discord as well. Last but not least, I'm just going to briefly go over the social sentiment. You can see that as Bitcoin has stayed around this 11K, high 11K level and sort of dropped down to the low 11K level, we've had a significant sentiment shift. We were very positive. Euphoria was kind of taking place, not quite like it was here or for Ethereum currently, but over 1 above the deviation of the mean, that's a sign that we are more positive than we should be about an asset. And we were there for, most of August, it looks like, even going into late July. And as we've stayed here, the belief has sort of dropped off, which is actually a good sign for Bitcoin. It means the community is starting to uniformly believe that Bitcoin should not be at the price it's at. And when that happens, the opposite can come true. Now, keep in mind, we aren't negative by any means. We're pretty much break even now for social sentiment, but it's still a good sign that the crowd is starting to potentially sell off and just, either go into altcoins, which could be the case with all the alts having all the fun and Bitcoin being a bit boring right now, or they're just, tethering out and getting into stable coins or cashing out their crypto. Whatever the case is, the sentiment has dropped. If we look at Ethereum, on the other hand, and keep in mind, we're using Twitter as our source, as we think we get the most predictive value from Twitter. It's the largest, and it gives us the best sample size. Ethereum almost hit, I think it almost hit 3 or close to it at one point. It looks like it peaked out around 2.4, which is a little lower than I thought, but it's still extremely high. And I believe it was an all-time high for the 5-year asset. So we hit huge elation here. And you'll notice as we were starting to decline, everyone was like, okay, the top has to be in now. And this was around 400. And then there was a steep social sentiment drop off as it rose all the way above 440, which is interesting. And this will often happen because the crowd just didn't believe that it should be as high as it was. And actually the crowd was kind of right. And as it hit 440, it kind of quickly declined back to 400. And it's now, I don't have my chart open, but before this call, it was at like 408 or something. It looks like the crowd is still slightly positive, but very slightly so, to the point where it's about break even again, just like Bitcoin. And that means that the door could be open for things to bounce back up to 430, 440 again, who knows? But I will say that combined with other fundamentals like DAA divergence, which is showing this, and MVRV for Ethereum, which is showing an 30 days and a 77% gain over the last year for the average trader. More concerning signs than optimistic, but that can easily change. And we also have dozens of other metrics that could have other indications, but I'm showing you 2 of my favorites now. And those indications have a lot of predictive value. So as it stands now, just be cautious with Ethereum and don't be surprised if there's a retracement over the next week, but not investment advice. There are a lot of things that can happen that could change things in a hurry, literally as soon as we end this call. So I'm going to stop my segment here. I know we started a little late, but I think I went on for about 25 minutes or so there, and I'm going to hand it off to Dino again.
Thanks, Brian. Guys, before I get into my sort of part of the presentation, just another reminder that after I'm done talking, we're going to be taking some questions from the audience and kind of looking at a bunch of metrics that you and a bunch of coins that you want to take a look at. So anything that you think that might be interesting for both you and the audience to look at, any sort of coins that you think might have breakout potential or you're concerned that they might be headed for a correction, let us know in the chat and we'll get to it in about 10 minutes or so. So I'm just checking out. It seems that for some reason I'm logged out of Sandbase. Hopefully I don't have to log in. Let's see. Okay, that's weird. Okay. Okay. One sec. Okay, I guess let me stop presenting for a second and go to, it's weird. What if I just opened it in another tab? All right, one sec. Is it still showing data? Because if it's showing data, then it's fine. Let's see. Nope. All right, let me take a quick second to go to my email. I'll stop streaming on Periscope for a sec. Okay. Sorry guys, sometimes I get logged out of Sandbase and need to get logged in order to really show you all of the data. But what I wanted to show is a number of things or a number of reasons in addition to what Brian just mentioned as to why I believe that we might be headed, or we have already kind of priced in this latest Ethereum correction. So in fact, we published a report in collaboration with Cointelegraph. The report was published, I think it was on Tuesday, where we were saying that there's a number of concerning markers for Ethereum as it was hovering at about 430. Okay, let me present my screen now. One sec. Okay. So like I said, we published a report saying, there's a number of bearish markers for Ethereum that concern us in the short term. By the way, Gary, let me know if Periscope stream is doing all right now that I restarted my stream. And I'm going to show a few of them at the moment. So let's start with the balance of Ethereum miners. Okay, there we go. So this was one of the things that we mentioned in our report for Cointelegraph, is the fact that over the last 2 or 3 weeks, pretty much ever since Ethereum started breaking above 300, we have seen a major shrinkage of the collective balance of Ethereum mining pools, which is what you're seeing here in brown, versus the price of Ethereum, which is in green. So over the last 30 days, the collective balance of all of the Ethereum mining pools has shrunk by over 80,000 Ethereum.
Excuse me, Dino, the Periscope stream hasn't picked up.
Okay, let me see. One sec. I think I might have to restart it. Okay, let me stop broadcasting and start again. Sorry, guys. Settings, stream. Apply. Okay, start streaming. We now should be fine. Let's check. I'm going live. All right. Gary, what's going on the Periscope side?
It starts to display the recorded one.
Okay. Okay, I think I'll have to just we'll have to just end the Periscope stream for the moment because I'm not able to troubleshoot it at the moment. So yeah, let's continue with the YouTube stream, and then we'll have to deal with the Periscope side after the call. Anyway, what I was showing is the total cumulative balance of mining pools over the last 30 days. And this is something that is one of the more concerning signals that we've been tracking for a while now. So let me zoom out a bit, let's say the last year and a half maybe. So you can kind of see the trends between the behavior of Ethereum miners and the price of Ethereum over time. So very clearly, I think there are instances where there's a clear inverse correlation between the Ethereum miners offloading parts of their bags and Ethereum reaching its local price top. So it happened at both times during Ethereum's 2019 rally. It happened very much abruptly as Ethereum was approaching its price high in February of 2020. It also happened here as Ethereum started consolidating in early June. And then over the last couple of weeks in particular, we have seen another major move by Ethereum miners. So in the past, like I said, this has been sort of a leading indicator that we might be due for a correction as Ethereum miners start to take some profit. Obviously, there's a number of reasons why this might be happening. It's not necessarily that they are not confident in the price of that Ethereum miners are not confident in the price of Ethereum short term. It also could be that the fact that they just need to cover some of their expenses. However, given the timing of this move, it's very curious and peculiar as to what it could foreshadow. And in my opinion, it's probably foreshadowing exactly this sort of movement that we've seen over the past couple of days. Now, I will give one caveat to this. And this is what happened in 2018, and particularly this part here. So in the past, especially during the sort of a run up to the all-time high here for Ethereum, we have seen a similar behavior by Ethereum miners here around mid-June of 2000 or mid-2017, where Ethereum miners actually thought that this is where Ethereum's top is going to be. You can see this sort of, Maxim, our founder, likes to call this a wall of worry from Ethereum miners, where they were pretty much starstruck by this sort of move of Ethereum as it first dropped. It first flew above $350 here, and they thought that it's probably not going to be able to soar any higher, and therefore there was pretty much 2-month drop off in the amount of Ethereum held by Ethereum miners. However, once they kind of realized that this might in fact be for real, and that Ethereum price could break new highs, even much higher than it was during the mid 2017, we saw Ethereum miners go back from distributing here back into accumulation mode here. And this is where the Ethereum price started really breaking out as one of the major market stakeholders, that being Ethereum mining pools, have kind of reawakened their confidence and loyalty towards the coin. So in the short term, these types of moves, as you can see here, they usually tend to coincide with local price tops and incoming corrections. However, if we're talking about sort of bull cycle highs, this doesn't necessarily need to be an exacerbated problem. It could just be sort of a repeating wall of worry that we've seen in 2017, where if we are able to once again break above maybe 450 and even 500, Ethereum miners might reawaken their confidence in the coin once again, and therefore, once we see them go back to accumulating, it could poise or it could indicate a higher price potential for Ethereum. For the time being, however, this is a fairly concerning signal, and I think this is what's being priced in over the past couple of days. So this is indicator number one that I wanted to show. At the same time, as we've seen the amount of Ethereum being moved away from miner balance addresses, we have also seen renewed activity among previously dormant Ethereum coins. So let me zoom in a bit just to kind of give you an idea of what you're seeing and show you a few different metrics. So, okay, let's start with this one actually. So this particular chart tracks the amount of dormant Ethereum coins, or the amount of Ethereum that have been moved at these particular days that have not been previously moved for the last 365 days or the last year. So obviously during the Black Thursday dump, we have seen the biggest spike in the amount of previously dormant Ethereum once again being moved, suggesting capitulation and people kind of, moving their coins in panic. However, after a few months of pretty much dormancy, or at the very least sort of standard levels of inactive coins being moved on the Ethereum blockchain, in the past several weeks, we have seen several spikes of reawakened Ethereum being moved on the blockchain. So this usually points to a behavioral shift among long-term Ethereum holders, where they believe that the short-term price action might be getting a bit too high for its own good, and therefore they start making moves, and sometimes even pre-pump positioning, which might be what happened here. And as a result, these spikes in dormant circulation very often coincide with times and periods of increased price volatility. So when we wrote the report, I think it was around here, we saw a few major spikes in dormant circulation over the past week alone, which we thought, given the this latest spike in Ethereum's price action, it might point to some long-term Ethereum holders starting to take profit, and therefore leading to a short-term price correction, which in fact it did. Now, another reason or another way that you can track these previously dormant Ethereum coins is by looking at mean dollar invested age, which essentially looks at a same sort of tries to represent the same thing. It tries to track the network-wide activity of previously dormant coins. So in very simple terms, when you see this sort of rising slope of a mean dollar invested age, it points to a network-wide trend of accumulation, or at the very least hodling. So basically, when you see a rising slope, it means that the average age of Ethereum on the network is growing. By average age, I mean the amount of time or days that they have spent in their respective addresses, meaning that as this slope is rising, that means that on average, Ethereum coins are remaining in their respective addresses. People are hodling, and very likely a lot of people are doing so because they believe in Ethereum's short-term and even long-term price potential. Now, over the past few weeks, we have seen this major drop-off in mean dollar invested age. And so let me zoom out a bit so you can kind of see exactly how big it is. Right, okay, so let's do this first. So we have seen similar flattenings of Ethereum's mean dollar invested age at very sort of peculiar times in Ethereum's price action. So after months of accumulation here in 2019, Ethereum's mean dollar invested age slope started to decrease or flatten right around its July top, which indicated that on average network-wide activity has moved away from accumulation and has pivoted more towards distribution of the network. We have seen a fairly similar trend here around Ethereum's 2020, February 2020 top, and obviously into the beginning of the Black Thursday dump. And then over the last couple of weeks, as Ethereum broke 300 in particular, we've seen another massive drop-off or valley for mean dollar invested age, which points to a market-wide shift or a network-wide shift, more precisely, towards distribution rather than accumulation. And this, in fact, if we look at the all-time mean dollar invested age, is the largest drop-off in the Ethereum's dollar invested age since 2017 here. Even the larger than, or sort of at the same point as it was during the 2018. So in general, I think when you see these sort of drop-offs in mean dollar invested age, especially in short term, they very often tend to coincide with local price corrections for altcoins in particular. So I would consider this to be a relatively concerning signal, given the fact that it points to a number of previously dormant Ethereum coins and a number of long-term investors in Ethereum, possibly even ICO investors, starting to move away their coins from their respective addresses, which very often tends to coincide with times of increased price volatility, as you have seen here, here, as well as at the moment. So these are a few additional points of concern that I wanted to raise about Ethereum. So now I wanted to also talk about OMG, but we're already about an hour in. So Brian, if we have any questions from the YouTube stream about the types of coins that they would like us to do some analysis on, maybe let's do that. And if not, we can go into some additional analysis of OMG in particular.
Okay,
Brian,
I will start with the earliest ones. Yeah, can you hear me?
Yeah.
Okay, so the earliest ones that popped up were kind of smaller, not so well-known assets, so we can sort of play it by ear, see if they're possible to get some analysis on.
Okay.
We already had a request for SAR vertical or CAR vertical. First I've heard of this asset. We do not have data for this yet, but I believe we're in the process.
Okay.
DOT, if you want to check that out, we may have some social volume on it.
Polkadot, yeah. Okay, so we don't have the on-chain data for Polkadot just yet, but we can at the very least look at what, okay. Yes, we can check out its social volume numbers here real quick. So after a period of not a lot of chatter regarding the coin, let's zoom into the last 6 months here. There's been quite an explosion in the DOT-related mentions. So what you're seeing here actually is the amount of DOT-related mentions on over 1,000 different crypto-related social media channels. So very typically, these types of spikes in social volume point to periods of what we call peak hype, where people become sort of irrationally confident in the coin's short-term price action. There's a lot of moon calls, Lambo guys, and as a result, very often you'll see these types of events coincide with local price corrections. So I think this is already what kind of happened for Polkadot, right? Yeah, let's zoom in a bit here so we can see. Yeah, so it started right around here as DOT was hitting its pretty much the same level as it was here, right? About about 400. Yes, 393. And then there was a massive rise in social volume coinciding with this correction. Since then, we've kind of tapered back off to pre-pumped levels of excitement towards Polkadot, which is good. What you don't want to see is these exacerbated or over the top moves in a coin social volume, pointing to potentially overvalued conditions and the crowd holding it in much higher regard than it should. Now let's look at some additional points of information that we have about DOT, notably the development activity of the Polkadot network, which remains pretty high. Let's see all time what it looks like. Yep, remains fairly high. Obviously, I think projects like Polkadot, anything that has to do with interoperability, I think is going to be pretty exciting in the months to come. I think one of the staff members here at Santiment has already dubbed the upcoming autumn as the interoperability autumn, as opposed to the DeFi summer, right? As more and more projects get into, and more people get into the DeFi space and want to tokenize their Bitcoin in order to use them in particular DeFi projects. Projects like Ren and Polkadot and anything that has to do with interoperability solutions, I think might gain value. And this might be the reason. I'm not sure if there's anything outside of that that might have sparked this latest price action. I think, I've seen a number of interoperability protocols start pumping over the last couple of weeks. Obviously, once again, not an investment advice, but I'm not surprised. This is, to say the least. So social activity has been kind of high before this correction here. Right now, we're going back to normal levels of price action, social action, which is good for the coin in the midterm. Let's look at its trading volume in general. Yeah, so pretty much at the same time as we saw this massive rise in social volume, we've also seen a massive rise in its trading volume as well, which, when you combine those two together, it does tend to coincide with periods of increased price volatility. So unfortunately, we don't have on-chain data. I would really like to see on-chain data for DOT as well. Hopefully, we can integrate it in the next couple of months and see, because Polkadot and related projects might become very interesting for the mainstream crypto community. So we want to keep track of those as well. Okay, Brian, do we have other ones that we want to cover?
Yeah. Next up is Serum SRM, which is a relatively new ERC20.
SRM. Let me see. Okay, so I don't know much about Serum. Let's
Open up
see.
DAA if you can. It's
Sure,
a
sure.
pretty interesting story there.
Okay, first of all, let me see all time, and then let's zoom
Just go
in.
even like
Yep.
last week might do it.
Okay, so very new. Only been live for about. Was this? Does anybody know? Was this first listed on Uniswap or was it somewhere else? I would like to know.
Don't know
So
myself.
yeah, okay. So the amount of daily active addresses has been rapidly declining. But honestly, like if you take a look at the actual amount of daily active addresses, it's still relatively high. Like this is something that you are obviously going to see as the distribution happens and the token because of the token launch, and as the in the next couple of days there's a declining network activity, which is completely natural. But still, like if we zoom in to and just disregard the initial sort of distribution of the coin, this is not bad. The amount of daily active addresses for Serum is still relatively high. So 217 addresses interacting with Serum today. I've done some recent research into the amount of coins that have more than 100 daily active addresses on average in the past month. And I think out of all of the ERC20 coins that we tracked, there were only about 20 to 25 assets that fit that criteria. So even though there has been a decline in Serum's daily active addresses over the past couple of days, number one, this is a very small sample size, but number two, having more than 200 daily active addresses still means that the network is being relatively utilized still, which is a good sign for its price action as well. As far as the transaction volume, okay, let's see the transaction volume in USD as well, which is something that we've added recently. So okay, so yeah, nothing out of the ordinary here. Let me zoom in here a bit. Periods of massive moves, then periods of pretty much nothing happening on the network. Okay, not too much that I can deduce from this. It seems to be I would need to know a bit more about how the tokenomics work for Serum before I added actual context to these transaction volume numbers. Let me look at the exchange-related activity. So once again, I'm not sure where Serum is. This is why I wanted to ask if Serum was the initial listed for Uniswap or whether, yeah, it seems like this is mostly traded on DEXs. Because outside of that, I'm not seeing anything in our exchange inflow. This particular metric is tracking the amount of SRM that is being moved away from personal addresses, individual addresses, into known centralized exchange wallets. Nothing seems to be happening over the last 2 weeks, which probably indicates that this is mostly traded on DEXs. Okay, in that case, let's move to mean dollar USD. I mean, it's the sample size is so small that it's difficult to really make educated guesses here. At the same time, we're seeing in general people start continuing to, over the last couple of days at least, people have on average continue to hold on to their SRM, which is something that you want to see. Once again, very, very short time frame for us to make any sort of conclusive decisions here. Age consumed has also kind of is non-existent over the past week or so. Basically, spikes in age consumed point to a major movement of previously dormant coins. But given the fact that the coin has only been alive for a couple of weeks, that's not really going to tell us much. Okay, MVRV. Let's look at the last one. So yeah, currently the MVRV of short-term holders is about all holders, given the life cycle of the coin, is about 2.7, meaning that the Serum holders are currently on average 170% in profit. This is based on its price since it's ICO, quote unquote, or token launch, which is pretty high. Obviously, the MVRV kind of varies from coin to coin and even from the platform, based on the platform that it's published on. Like we've published last week an article about Uniswap and how people are now starting to use Uniswap to look for risky coins that might have a 5, 10, 20x potential. There's a lot of exit scams and shit coins and vaporware on there that you have to sift through in order to find, gold nuggets. So I'm not surprised that things like Serum are still, the profit margin is still fairly high. I could see it go quite higher before holders start to sell, because I think for these types of coins, holders expect massive profit margins rather than something that they would expect for established coins like Chainlink or Ethereum and stuff like that. Once again, there's really not a lot of data that we can go on as far as fundamentals are concerned. This is a very young coin. It's only been alive for like, 10, 11 days. So I don't really want to go too much into trying to predict what's going to happen. It seems like it still has some amount of on-chain activity, about 200 plus daily active addresses a day, which is good. Its profit margins among short-term holders are high, but I would not be surprised to see it go higher. I don't know, proceed with caution. If this is, as I think was initially published on Uniswap, just keep in mind that there's a lot of people trying to make a quick buck on there, and so there's been a lot of coins that have been listed there that kind of make 5x in the first couple of weeks, and then they fall into oblivion. So I really don't want to, suggest people to try and do something like that. Okay, Brian, anything else?
Yeah, we've got another ERC20 swipe, SXP.
Look, I like Swipe, though I haven't really looked at it for a while. Okay, very nice. Since July, okay. Okay, let's start with exchange volumes and exchange metrics. I want to see what's been going on. Okay, not surprised to see this in particular. Massive spike in the amount of exchanges, in the amount of SXP being moved to centralized exchanges. What is this, 17 million? So basically 34, around $35 million worth of SXP being moved to exchanges right before this correction. This type of sell pressure, especially for mid to low cap coins like SXP, very difficult for bulls to absorb. So very unsurprised to see this sort of move downward since the correction, since the exchange flow. Let's look at the amount of daily active deposits in general over the last year. So daily deposits, basically what they are is they show us the amount of active addresses that are used to funnel SXP to exchanges. So the more active deposits there are, the more people and more addresses are moving their SXP to exchanges, pointing to a rise in speculative activity. So over the past couple of months, obviously, we've seen a rise in the activity of daily deposits for SXP. It's pretty much spiked or peaked here around its all-time high on August 13th with 209 daily active deposits. Since then, it's still, remained relatively high. So there seems to be quite a lot of speculative related activity connected to SXP over the past week or 7 days or so, which would not make me super excited about going into it. Let's look at the amount of SXP actually being on exchanges. So it goes from just 1% of SXP total circulating supply existing on or being located in exchange wallets here in June before the price action really started going. Then we have a massive spike here to 31% of SXP total supply being moved to exchanges right as the coin starts to consolidate. And then we have another big spike here to 34.5% of total SXP being located on known centralized exchange wallets. So this is a massive spike. At the moment, you see SXP's available supply, going from pretty much nothing being available on the centralized exchanges to about a third of all SXP in existence being moved to centralized exchanges in the last month and a half. If I were looking at a coin, I wouldn't consider that a great signal. It seems like a lot of speculators are moving to take some profit for SXP. There's really not a whole lot of other reasons why you would transfer so much of an asset to centralized exchanges. This particular spike, though, it might be just like a few big whale wallets looking to move their SXP to exchanges, given just the curvature or the verticality of this spike in particular, as is this one. So it might be just a few big whales trying to look to take profit. Not a great signal, not a great sign for SXP in the short term. All right, let's look at actual activity in the network. I'm quite interested. Okay, not bad. Let's see. Let's zoom out. Pretty much nothing, and then we got life once again in the past 2 months. So we go, as the price starts to rise, obviously we have a correlating spike in the amount of activity on the network. It peaks here at almost 900 daily active addresses, and still it's remaining pretty high. 500 DAA. Obviously, many of these, new unique addresses that are being used to interact with the network are speculators. So I don't think there's a whole lot of like renewed or new utility for the SXP coin that is prompting this spike in on-chain activity. This is mostly speculators driving network activity, but still, it's a good sign for the network in general that there are people interested in interacting with the network and interacting with the coin. For whatever reason. I know that it sounds a bit weird, but we're still in very early days for crypto. So if you see high daily active addresses in general, even if it's just speculative driven, it does provide some level of fundamental support for the price action to rally. And we've seen similar spikes or similar upticks in the amount of actual SXP being moved on the network in the past couple of months, all relatively good signs for the coin's price action. However, given what I've seen in their exchange metrics, I would tread with caution. It seems like a lot of speculators are starting to move their coins to exchanges. Okay, let's look at a few more metrics. Mean dollar invested age. Yeah, so if you remember what I was talking about, what I was saying as far as Ethereum's mean dollar invested age is concerned, these massive drop-offs point to a period, so these sort of rising slope in SXP's mean dollar invested age means that on average, the coins in these 3 months were not really moved on the network all that much. They stayed in their respective addresses. People were content with sitting on their bags and waiting for them to inflate. Once they started inflating, we saw a first drop off here, pointing to a network-wide pivot or change from accumulation into distribution. Sometimes, just people looking to take profits, which coincided with the first sort of consolidation period for SXP, and then we saw a flattening of the mean dollar invested age right before the all-time high or the peak here, and then another drop off here. This, for me, would be another concerning signal. Okay, let me look at the MVRV and see where we are. All right. Cool. So look at all-time highs. Is this all-time high? Yeah. Sorry. All-time data, I mean. Yeah. All right. So I want to know where we are as far as SXP's short-term and long-term holders are and what their average profit or loss is. So in the past, let's see. So what I want to do here is I want to see in the past, what were the profit margins for, first of all, short-term holders. So these are the addresses that have acquired SXP in the past 30 days. What were the general profit margins at which they started offloading some of their bags and selling and taking profit? So in the past, that used to be 1.7, so 70% the profit, average profit among short-term investors, 80%, 100%, which coincide with like local tops. And then more recently, we've had a major spike here to 2.19, meaning short-term SXP holders were 119% in profit. And here we had an all-time high in 2.58. So meaning that on at this very top, short-term holders were about 150% in profit, which is quite high. And obviously, as the MVRV rises, there's more and more sell pressure and incentive to sell because people are, their bags are getting heavier and heavier. So at the moment, we've actually started to dissipate a bit as far as the short-term profit margins or ROI for SXP. They've kind of reverted back to break-even territory. I'm assuming because of this move right here. And currently, the MVRV for short-term holders is 1.03, meaning that short-term holders are currently at about break-even as far as their SXP bags are concerned, which is a good sign for SXP in the like midterm, which because it points to there not being a whole lot of reason for new holders or new SXP money to start moving their bags, because they're really they're currently just breaking even. There's not a lot of reason why you would start moving your bags at the moment. On the other hand, as far as the long-term holders are concerned, this is the 365-day MVRV. I want to zoom out of these initial price tops. So yeah, here we had a massive amount. So this was I think the highest the 365-day MVRV was in early January, almost 816% profit. Here it peaked at 4.45, so 350%. And since then, I mean, yeah, the long-term holders are still about 150% in profit for SXP, which is still fairly high. But given the historical precedent that we see here, I could see them holding on to their bags a bit more before selling once again. So overall, I would say some good and some bad for SXP. There's some amount of on-chain activity still going on. Daily active addresses is fairly high for an ERC20 coin. Transaction volume at an uptick. However, the dormant coins are starting to move on the network at a rapid clip over the past couple of weeks, which is never good, especially if you see a coinciding spike in the amount of SXP being moved to exchanges. These two things in particular can very often point to a rising interest for speculators to start, which is not great. Let's look at social volume real quick and see if there's been any uptick in the amount of mentions for SXP. Yes, there has been. So here, right? Okay, I'm interested. There has been an uptick here, but there seems to most of the activity seems to have been concentrated around this second top, the lower top here. So this is, I think, is it an all-time high amount of SXP mentions? Yes, it is, indeed. Okay, let me zoom in. Zoom in more. Massive spike in the SXP mentions, pointing to peak hype, leading to a short-term correction. Seems like there's something that happened here. Maybe there was even an announcement. I don't know. I haven't, like I said at the beginning, I haven't kept track of exactly what SXP has been announcing recently. Maybe some sort of a partnership deal or something. But we've definitely seen an uptick in the amount of mentions and the amount of attention towards Swipe in the past couple of weeks as the price started breaking out. Not ideal for the coin. Like I said about 5 to 10 minutes ago, anytime you see these massive growth in the amount of social volume for the coin, it could point to overvalued conditions and the crowd sort of talking about it a bit too much than what you want to see. You want to kind of see the crowd being either ambivalent about the coin or not really paying too much attention to it, because in that case, it provides enough room and space for the price action to grow before the crowd starts getting in and whales start dumping on it. So once again, not a great signal for its short-term price action. It might have been already priced in though. Hard to say. Okay. I think we're about we're about 65, 70 minutes in our call. So this is probably a good place to stop. Unless, Brian, do we have any other major questions that we want from the stream that we want to take care of at the moment?
No, it's mostly just questions about how, whether our whale activity data exists and for what types of assets. And then we have just tons and tons of asset requests because they appear to like your analysis. So we can save it for next week, or we could even tweet about some of these questions like Bitcoin Cash and Litecoin, which are some majors that we don't often talk about. And then smaller ones like FTM.
Yes. Okay, we don't want to get into Phantom at the moment, but let me just see what it's been doing. Okay. Social, yeah. So I mean, you guys, you can see I don't even have to really do much of analysis here. When you look at these spikes in social volume and how they correlate with the price action, it's fairly straightforward. I honestly think that as far as our indicators are concerned, stuff like daily active addresses and social volume, if you had to like choose two metrics to just look at the general market-wide sentiment towards a coin, just look at its social volume and look at the amount of activity in the network, and you'll see at least a microcosm of what's going on with the coin. So this sort of a massive spike in its social mentions over the past couple of days, once again pointing to the crowd being a bit too overhyped as far as what should be good for FTM. I'm not going to go into too many on-chain analytics here. We can tweet about it. So anything that you posted in chat as far as the coins are concerned, we are going to make tweets about it in the next couple of, maybe by the end of the day. And also I am preparing an insight today on insights.santiment.net. You can find it here. So I will be covering some of the coins or requests that you had in today's chat. So keep an eye on that over the next maybe 6 to 7 hours. It will be live on insights.santiment.net as well. Otherwise, just join our Discord and ask us there in private or on our trading channels, and we'll give you some quick and proper analysis as well. Anyway, I think we gotta call it close right now because it's 5:20 already. Thank you, everyone. Sorry for some of the technical issues that we had at the beginning of the stream. We're still trying to figure out how best to stream on multiple platforms, so it's going to take a little bit of time to get it perfect, but please bear with us. If you liked what you saw today and what you heard from us, two things that you should do. Number one, you should check out app.santiment.net and create an account if you haven't already. There's a 2-week trial. You can try any of the metrics and templates that we have talked about today. Just ping Brian, and he will be able and happy to share some of his price and the DA divergence templates, MVRV templates, anything that we have that is not already available on the Sandbase platform. Brian will be happy to provide to you. And then anything else that I was showing today, you can already get access to it just by creating an account on Sandbase. Number two, please like and subscribe and comment on this video. I know it's a cliche, but people keep saying that because it works. If we want to grow our kind of foothold in the YouTube ecosystem, we need to convince the YouTube algorithm that our data is legit and our analysis is good and that more people should see it. So please, if you agree with that sentiment, like and subscribe so that we can expose our metrics to more people and grow our community as well. So with that said, I would like to thank everyone that has stuck to us by the end of this call. I would also like to thank Brian, as always, for his great analysis at the beginning of the stream. And I'll talk to all of you guys in 7 days.
Good stuff, Dino. Thanks so much. Thanks for tuning in, guys.
Thank you, guys. Okay, bye-bye.